Hello everybody and welcome to this very interesting video we have for you today covering Fuelcell Energy. This is a video that has been requested by one of our subscribers in connection with our recent videos that covered the top 4 hydrogen stocks and thereafter the more detailed videos on Bloom Energy and Plug Power respectively. So Fuelcell Energy, the stock ticker is FCEL, the market cap is around 2.6 billion, the sector is clean energy. The share price is 2.33 and it is from the USA. So we will first run over a snapshot of the company. We will then go into its main business as of today. We will look at its future business. We'll look at its financial and goals. We will look at some of the pros and cons. And then finally we're going to compare it to BE and Plug. Just to give a small snapshot overview of the company, the headquarters is in Danbury, Connecticut. They have around 300 employees that are working across 3 different continents, North America, Europe and Asia. They have globally 59 different power plants, which we will show shortly, and the total capacity is more than 260 megawatt. And as we can see here, the customer base covers commercial and industrial enterprises, including utility companies, municipalities, universities, etc. And there's a lot of well-known names here: Pfizer, ExxonMobil, Toyota, Radisson, Edison here. So quite a lot of different well-known companies among their customers. We also thought it would be good to just have a quick look at the history. So as we can see, it was founded as Energy Research Corporation, ERC, in 1969 by early fuel cell pioneers Bernard Baker and Martin Klein. It was first in 1992 that they did an IPO and it was renamed as it is today, Fuelcell Energy. In 2007, they expanded through a global partnership with POSCO Energy. We will touch upon this later in the video, where they were targeting markets in Southeast Asia and more particular South Korea, so the same as Bloom Energy. In 2012, the company's European facility was established in Germany. And finally, in 2017, they established a JV with Toyota to develop a facility in Long Beach, California. So as just mentioned, the main products that they have today is where they design, manufacture, operate and service what they call direct fuel cell power plants that runs on natural gas and biogas. And as just mentioned, they operate 59 plants all over the world. So here we see an individual fuel cell stack on 350 kilowatt that can be assembled into one module on 1.4 megawatt that is connected here up to the whole power plant, which the smallest one they have is the 1.4 megawatt, which they call the SureSource 1500. They also have 2 modules combined, the 2.8 megawatt, they call that the SureSource 3000, and they have one with 3.7 megawatt, which they call the SureSource 4000. And what is really interesting about their product, that is that they can scale these up to become large scale fuel cell parks. So you will see here this one in South Korea, which is the biggest one in the world as of today, on 59 megawatt. And this basically consists of 21 of these individual SureSource products. So they distinguish themselves from a power generation perspective from a company like Bloom Energy, which has smaller modules, whereas these ones goes for the big projects. Lastly, they have here the 2.35 megawatt SureSource hydrogen, which we will come more into later in the video. As mentioned initially in the video, the ultimate goal is to deliver clean, efficient, affordable fuel cell solutions configured for the supply, storage and recovery of energy. So please note these 3 words here: supply, storage and recovery. On the supply side, the power plants that we just ran over can produce multiple value streams, including production of ultra clean electricity, usable heating and high purity hydrogen. And this can be done beyond the power production. This is the most important and interesting thing about the company as of today. So to illustrate this in a bit more detail, they have 2 applications where they can produce hydrogen. This is the first example where they use biogas as the fuel source to generate heating and power for the water treatment process. And out of this, they can also produce, in addition, renewable hydrogen that can be used for transportation. And as of today, they already have such a setup in Orange County wastewater treatment plant in Fountain Valley in California. So for me, this is one of the big advantages of the fuel cell products, that it's versatile and can give, as we just mentioned, the multiple value streams. The second part is related to industrial application, and in this case, ultra clean electricity powers a manufacturing process. The heat is used for facility and water heating, and the high purity hydrogen is used in the process ovens, thereby replacing what they otherwise have to do, which is to buy hydrogens and get it delivered by a truck to the facility. So again, versatile application. It basically expands the market for how you can use this type of power plant, and this is again one of the very interesting elements around fuel cell as of today. So from a future perspective, even though that the power plant is the current main business of fuel cell, they want to expand their product offerings, and they want to invest, or they are investing heavily in hydrogen side. So we mentioned the product earlier in the video, which is called the SureSource hydrogen system, and currently they are developing a facility in Long Beach to support Toyota's hydrogen operations in the future, their hybrid cars and trucks. This is a project that has been going on for around 2 or 3 years. However, it has been stalled because there was uncertainty as to whether fuel cell would be eligible for some special tariff exemptions. That was given around 6 months ago, and they are now starting the construction of the plant, which they expect to have operational in the end of 2022. So these two elements is under the pillowstone, what they call the supply side. And again, power plant is already in operation, and the distributed hydrogen part will become commercially available. It is already, but it will first come operational in the future. The next element in the future products is what they call hydrogen and energy storage. And this is a project they're developing with the US Department of Energy, where they're trying to make it feasible to store hydrogen and other energy for longer durations. This is in advanced development, which means that it's not something that is ready. It may not come to the market. Time will tell, but it falls under the second pillar of the ultimate goal, which is the storage part. And finally, they're working on carbon capture, which is a project that they're developing jointly with ExxonMobil, one of the big oil and gas majors. This is in the early phases of development, and they do not believe that this will be ready before some point after 2022. And this one falls under the recovery part, which is the third pillar. Just want to stress that they already have some smaller technologies which does some recovery of energy. However, this is the most important one, and it is still in the very early days. So fuel cell business strategy has basically focused initially on what they call the transformation. We'll not spend too much time on this, but basically build a solid financial foundation around the company. And as some of you would have seen in our hydrogen video, this was one of the things that we were criticizing a little bit about the company. It was the strength of the balance sheet. Next, they had what they call strengthen the business and maximize operational efficiencies. So basically, put the money where it makes the most usage. Be sure that they develop good commercial relationships with their customers, and that they basically execute on the backlog, which we'll also touch upon a little bit later. And finally, in the next 2 years, what they will focus on is to grow the sales. They want to continue the innovation parts, which we obviously just ran over with some of the new or future products. And then they want to expand their market presence, and they are targeting growth opportunities in Korea and Europe markets and across Asia, which is by no surprise considering that both South Korea and the European Union has very aggressive targets, especially within the hydrogen sector. Now we move into another very important section, which is around the profitability, the backlog, and the revenue. So if we first take a look at the profitability, it is by no surprise if you have seen our video on hydrogen stocks that Fuelcell is losing money. And they're actually losing more money today than they were a year ago. The company attribute this to the fact that they got a one-time license fee from ExxonMobil when they established their partnership with them on development of the carbon capture recovery system. However, one thing that I found really interesting in one of the management notes in one of the previous 10Q filing was that they said, we expect to continue to incur net losses and generate negative cash flows until we can produce sufficient revenues and margins to cover our cost. We may never become profitable. Even if we do achieve profitability, we may be unable to sustain or increase our profitability in the future. So this was it was very interesting because, I mean, obviously a lot of these type of companies have run with losses for many years. But a company like Plug Power is at least coming out saying, we think that within 4 years we will become profitable. When you read something like this is a bit red flag for me, because it somehow gives the indication that even the management doesn't really 100% believe in their products unless they get substantial support from, for example, the government. If we take a look at the revenue side, one of the things that you will notice is obviously that from 2017 and 18 to 19, the revenue has dropped significantly. And the primary reason for that, as we can see, is the revenue coming from South Korea. So as we mentioned initially in the video, the company back in the days entered into a relationship with what is called POSCO Energy. And they are basically in a legal battle with POSCO Energy, who has spun off their fuel cell business side. And Fuelcell is in a disagreement with that, but it basically means that their position in the South Korean market has been hurt quite significantly. And again, it's something that you need to be very well aware about, because a drop in revenue of around 30-40% is quite significant from a company that is already struggling from a profitability perspective. We can also take a look at the backlog, which has obviously grown smaller over the last year. It has gone from here 1.38 billion to 1.32 billion. And the company states that this is because they're executing projects, but there's definitely also a link up to the revenue side, and most likely in South Korea, where it has been more challenging for them to get new business. And what is really important also to mention on the backlog side, yes, it looks really great and all of that, but a big portion of this is revenue that won't be materialized perhaps for a decade or more. They may even get canceled along the way. So it's really important not to 100% think that this high backlog means that there will come a high top line growth in the future. It will come as time goes by, and it will not go quickly. So again, this is one of the big drawbacks of Fuelcell at the moment. That is that they're not profitable. Their revenue is shrinking in South Korea, which they have targeted as one of their main markets. One of the concerns that we also had with Fuelcell Energy in our hydrogen stock video was the cash and liquidity situation. And although in Q3 they have increased that through issuance of new common stock, it is still only at $107 million in total cash, restricted cash and equivalent. And what that basically means is, when you consider how much money Fuelcell loses on a per quarter basis, if this continues, well, then at a certain point they will not have enough, and they will have to most likely issue more common stock, which in the end of the day will dilute shareholder value. So it's really important to understand that this liquidity actually comes at the expense of dilution of the shareholder value, and it's something you need to take into mind if you decide to invest in a company like Fuelcell, which is on a consistent basis losing money. We can then have a look at what their 2022 target is. And if we just move back to the video we did around Plug Power, one of the things that we really like about Plug Power was they were very specific in terms of where they want to go in the next 4 years. They had a really clear 2024 plan. They are obviously saying we don't know if this is going to be achieved, but at least you could see the path to where they want to go. We will say with Fuelcell, we do not have the same warm fuzzy feeling around them. They say here that they want to grow the generation portfolio, which is the power plants, with 100%. They want to have double-digit compound annual growth rate for the revenue. They want to deliver a positive adjusted EBITDA. So again, sounds very nice, but what does it 100% means? The future goals is to achieve grid pricing parity. Again, the positive EBITDA. They want to deliver positive free cash flow, which would obviously be really good. And they want to deliver return on invested capital, but it doesn't really specify how much they want to return. And again, we just felt that if you benchmark this compared to plug power, it's a lot more fuzzy. It's a lot more unclear actually what they expect. And if you see the statement before from the senior management, this just adds to the uncertainty around Fuelcell and whether they will be able to accomplish this, in our opinion. Lastly, they obviously have the key factors to achieve this is the execution on the project backlog. They want to win new business around the world. They want to continue focus on cost control. Yeah, they will have to because they're losing money. They want to deliver on project milestones. Yes, of course, that should be the minimum. And they want to efficiently do capital deployment, which was also a target that they already set in 2019. So it's not really anything new. So again, we are not really 100% convinced about the message that they're trying to deliver to the market. When diving into an annual report or quarterly report issued by the company, there will obviously always be some of the risk that has been identified by the management that can impact the business. For Fuelcell specifically, it was quite a surprise to me because of the sheer quantity of risk that they have identified. Here I have not even listed all of them. I have only selected the main ones. We're not going to run over all of them because that will be a little bit boring, but I would actually suggest everyone to just have a stop and read through them, because it's actually, you know, a little bit scary, and it doesn't mean that all of these will come into play. But what we see is that there's just so many different ways that this company can be hurt. If we talk about government subsidies, as we mentioned before, market acceptance of their products, factors that can affect their liquidity position and financial condition. The government has certain rights that they can exercise over the company. The situation with POSCO Energy in South Korea, which could expose costs to them from an arbitration or litigation proceedings, their ability to reduce their cost, their ability to protect their intellectual property, the need for additional financing, generate positive cash flows, their ability to service their long-term debt, and their ability to expand their customer base and maintain relationships with the largest customers and strategic business allies. And again, quite often a company may put additional risk that they don't expect to actually be 100% realistic. But in this particular case, there's just so many that, again, it just does not give us this warm, fuzzy feeling about the company. So as part of these reports, the management also puts out their forward-looking perspective, and these are obviously somehow connected to some of the risks that we saw just before. But again, with Fuelcell, it's just interesting to see that basically what they're stating is that we cannot assure we will be able to meet any of our development or commercialization schedules. We will be able to remain in compliance with the minimum bid price requirement of the Nasdaq listing rules. Again, the share price, as you will see in a bit, has increased quite significantly, so right now that is not really a big risk. Any of our new products or technology, once developed, will be commercially successful. Our existing SureSource power plants will remain commercially successful. The government will appropriate the funds anticipated by us under our government contracts. The government will not exercise its right to terminate any or all of our government contracts. We will be able to achieve any other result anticipated in any other forward-looking statements contained herein. So some of this is obviously a little bit fluffy, but it's again just to highlight that there is a lot of uncertainties and risk in the company. And when we read these things, we just have somehow a feeling that is this company really believing in itself? With Plug Power and also Bloom Energy, you got that kind of like, okay, we think that we will be successful in the future. It may take some time, but it will come. But when you read this, you just get a little bit in doubt, we would say. So again, just to be aware of this is not unique to Fuelcell. All companies will put out some of these forward-looking statements that are sometimes a little bit, obviously have a negative impact, but the share size of the Fuelcell is just a little bit high. So just to recap some of the elements that we have run over and the pros and cons that we see with Fuelcell as of today. On the pro side, they are creating products that will contribute to zero emissions in the future. This is very important. Governments around the globe are setting aggressive targets, especially within hydrogen. So this is definitely an area that Fuelcell needs to be in. The product that they have as of today, the power plants, they're versatile. They can generate different value streams and be used in different applications. So we really like that. They're expanding their product portfolio. Hopefully they will be successful in that. That's also very important. So they're moving from a very narrow portfolio to a more broad portfolio. So a little bit closer to, for example, Plug Power. They focus on reducing the cost. They have to do that because they are losing money. And finally, they are also very technology driven. They have a lot of partnerships with different companies, which hopefully will positively contribute to future revenue growth. On the con side, there's quite a few. One of them is obvious, they're still not profitable, and it's difficult to see them become profitable in the near future. This is more than 28 years since they did the IPO. So again, it's not just a company that was created 10 years ago like Bloom Energy. That's actually been active for a lot of years. The balance sheet is not that strong, even if they increase the liquidity position. There's no guarantees that the R&D efforts will be successful. Today, they're very dependent on a few customers, and if they leave, it will further hurt their revenue stream quite significantly. And from hydrogen side, similar to the other companies, yeah, but traditional fuel is cheaper, and there's still doubt as to whether customers will actually change. So finally, we thought it would be good to benchmark Fuelcell against Plug Power and Bloom Energy. If you haven't checked out, please see our top 4 hydrogen stock video and also the individual videos that we have done on Bloom Energy and Plug Power. There's a lot of great information contained in those videos that will help you a lot if you have an interest in investing in one of these companies. What is interesting is obviously if you see the percentage change since we did our initial hydrogen stock video, Fuelcell is the one that has done the best increase with 280%, so quite significant increase. Plug and Bloom has also increased quite well with 45 to 61%, and BLDP had a small 13% increase, which overall is quite a surprise to us if you just purely look at the numbers that these companies are delivering as of today. However, the hydrogen stocks, at least over the last month, has really gained a lot of attention. It has come on the radar, and a lot of people, governments, as mentioned before, is setting more aggressive targets from the future, which obviously has helped these companies' share price. We would though say that in almost all the cases, more specifically for Fuelcell, we do not see this increase justifiable. Even if it has a smaller market cap than both Plug Power B and BLDP, when we analyze the company a bit further, we see that there's so many risks associated to this company that we don't see a justification on the 280%, and we therefore have a feeling that the company share price has just increased purely based on hype. Again, we may have missed something, so if that is the case, please provide a comment down below, but that is at least how we see it as of today. And we are a bit concerned that if a few bad news slips out on Fuelcell, basically their share price will tumble down again. So we do not feel that this is an attractive investment as of today. Finally, we thought it would be good just to compare again versus Plug Power and Bloom Energy. And basically, Fuelcell, similar to Bloom Energy, is transitioning to become more hydrogen focused, where Plug Power at least is established already. Bloom Energy is doing the same. On the product offerings, it's narrow at the moment, but they want to expand that and become a bit closer to Plug Power as previously mentioned. They use fuel cells for industrial usage, so again for high scale projects, whereas Bloom Energy is more on the smaller side. They're very much depending on future technology. So far, even though they have projects, they're not profitable with their power plant generation, and again they therefore need something new to take it to the next step and actually become profitable, in our opinion. They're focusing both on US, Europe and South Korea, which is quite good, and also some other markets as we ran over earlier in terms of the revenue. And they have been for the market for more than 28 years, and they have basically been underperforming, losing money on a consistent basis, which again we don't like. We hope that they can turn it profitable, but we would say we see a bit better, path for both Plug Power and Bloom Energy compared to Fuelcell. And finally, all stocks are obviously based on or traded on future expectation. But as mentioned on the Plug Power video, we really again feel that Fuelcell is based on pure hype and expectations of what they may be able to deliver in the future without any guarantees. And that is why we do not feel that the increase in the share price is really justifiable, and we would not enter into a position with them as of today. Does that mean that they cannot continue to grow and outpace the others? No, that does not mean that. It's just when we analyze the company, we don't really see the same value, and therefore we will stay out because we could be concerned that there will come a big correction. This was all we had for today. We really hope you enjoyed this video. Please subscribe for future content, that really helps the channel. Please give us a like, that is also helpful for the algorithm. And please provide a comment in the comment section. We can see that you guys have a lot of valuable information to contribute with that we do not always see, and it gives a different perspective. Remember that we are not professional financial advisors, and this is only done for entertainment purposes. So again, do your own due diligence before you take an active investment decision. Otherwise, there's not much more to say than stay safe. See you next time. Bye.